Welcome back, guys, to another Zero DTE video, and today Coach Ernie is going to be talking about conditional trades, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Coach's education platform. Enjoy, guys.
So currently we have three strategies. One is our primary strategy, which is the out of the money fly, and we adjust it based on volatility. The other is the Batman, which is conditional based on higher levels of volatility. Then there's the big ass fly, which is not necessarily conditional upon just the VIX, but also conditional upon the expected move, where we have to have a debit on that big ass fly of 25 or lower. In other words, a one-to-one risk to reward or better. So then the third potential one would be a variant of the big ass fly that is taken later in the day. So that's what we're going to look at or start looking at and develop some data around it and experience. Now, does that mean that I'm going to trade it? I might trade it here and there, but primarily it means that I'm going to put it on as a staged trade and then analyze it. All of the trades are essentially the same. The way the big ass fly differs is that it doesn't have extreme risk to reward, except for in some cases where it does, actually. So if the debit on the big ass fly in the morning gets low enough, then you do have some level of extreme risk to reward as high as 1 to 10 if the debit gets down low enough. But those are pretty extreme cases. That's one of the reasons why we like trading it, because it's a trade that has a high degree of probability and the potential to make a lot of money. It's a conditional trade. So it's very important that you keep that in mind. But even our most basic trade, the single out of the money asymmetric fly, is also conditional that it meets all of our criteria. Of course, the primary criteria are the width and the direction, and those we can set any day. But it also requires that we pull back to a level that we discover through our volume profile analytics. We analyze and mark up our volume profile so that we can see levels that it might pull back to. If it never pulls back, there's a case to be made that there's no trade, simply because where do you get into the trade? I suppose you can get in just about anywhere and then just take your chances. But everything that we do is about minimizing the risk, the volatility of our returns, and maximizing the return on capital put to work. And you would have a hard time convincing me that there is an optimal way that you can get into a trade that never pulls back to a structural level. If you could, that's great. Then convince me. But that situation doesn't happen very often. I think yesterday might have been one of those days where you might argue that it didn't happen. Or at the very least, we didn't identify a structural level that may have existed, or we overlooked, or didn't meet our criteria. But I didn't see any real pullback that justified taking a trade yesterday. So in a move up, because we have a directional bias that is up, we're looking for a move that does something like this. Pulls back to a zone and then goes up, whether it's this zone right here, or this one right here, or this one right here. But that never really happened, right? This is not a pullback moving up into this. You could argue that this is a pullback into this zone, but it happened very late in the day. Should we take trades like that? That's a good question that I just asked that you're probably thinking. And I don't know. I know that I choose this time frame, the morning session, to take trades because overall you have on average heightened implied volatility during that time. And that gives you your best risk to reward scenario. Once you start getting out here into the day, particularly around this time of day and in low volatility, the premium decay is accelerating and there's less meat on the bone, and so your risk to reward, everything gets worse. So that's why I'm saying I would have a hard time justifying a move that happened outside of this time frame. Now, I know that some people did take trades yesterday and may have made a little bit of money. I saw some people did. Good on you. I am just trying to lay out the reasoning for taking a trade and the reasoning for not taking a trade. And yesterday, I could say that there wasn't, in my opinion, good reason to take a trade. Now today, really good reason to take a trade. Pull back. Now, this is a very different situation here. We're pulling back right to a structural level, and bam, look at that. Perfect. It's perfect setup. What I was hoping for yesterday is that we would do something like this, break through and then come back and then go up. And we broke through just barely like this, but we never really just came back and then went up. We just went back down and stayed down.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.